I would even call myself only slightly on the bear side now because I think we're getting closer versus, I mean, when we were at 60, I was like ridiculously bearish, 50 ridiculously. Once we got below 20, it's like, okay, we're getting there. And now I see, it's kind of like you see the light at the end of the tunnel. You can just start to see the end game here. And it's exciting because I'm a big fan of Bitcoin long term. It's just I couldn't do it until I thought that the bottom was at hand. So here we have the chart of Bitcoin, right? And what we can see here is that Bitcoin is holding steady, and we can see right here it broke to the downside. And you can see this, right?
Mm-hmm.
All right, so basically this was a major support line. We have a pivot from June. It connected through here and right here, and we finally broke that. And what we're actually forming, this is called a flag pattern, a bear flag to be exact. And I'll draw it in so those of you that can kind of see. So here's your flagpole, which is a vertical drop. And then essentially you have a move here and you connect these highs, and you can see how it's like an upside down flag pole, right, with a flag. And so that's known as a bearish pattern, and that usually probabilities dictate that it will break lower, and breaking lower is going to take us down to this pivot from 2019 and then this one from 2020, and that's going to be major support. That's right around that 13,000 area, at which point if we should get a bounce. But ultimately, I would expect a final flush down. And then we have this long-term trend line, which coordinates with that Lehman Brothers kind of correlation, which is right around $8,000 to $9,000. And that's kind of where I'm looking for Bitcoin to bottom. And what's fascinating about this is if we go down to that $8,000, $9,000 level, it's doing is it's taking us down to the long-term uptrend of Bitcoin, right? From the long-term low here from 2017 before the first big bull market there. And then this one little in here, there's their COVID low. And basically all you're doing is connecting those lines, those points, and you get that target price. And that's what investors have to realize too, is that as you have the Fed continuing to tighten, now it looks like inflation is starting to kind of subside a little bit. So the Fed may not have to hike 75 basis points in December. Maybe it's 50, maybe it's 25. We'll have to see. But there's no doubt that as we go down, in the stock market, because of the Fed kind of contracting the monetary system, there's going to be more hurt in the crypto markets. And I fully expect more bankruptcies. My only hope is that FTX was the biggest, right? Let's get that one out of the way. If some smaller ones go bust, it's never a good thing, but at least it's not as earthquake-like as the FTX one. So there's no doubt that the Fed is doing this. And it's part of the reason why this bear market cycle could be just a little bit longer. You don't have the Fed printing money. I think the biggest thing that gets us out of this bear market is regulation. And who would have thunk a year ago or 2 years ago you'd ever say that regulation gets us out of a bear market in the crypto markets? But if you're going to attract big money back into crypto, which, let's be honest, big money is going to drive the price up, right? They're all buying hundreds of billions, if not more, buying. You need that regulation. You need that transparency. And I think even with, just think about a small investor. A small investor has a hard enough time picking buying opportunities in crypto where they're going to make money, not lose. But they also have to worry about, is my exchange where my money is it going to be in business tomorrow? That shouldn't be an issue. I mean, especially in this day and age, where we have all this technology and everything, it shouldn't be an issue. And I hope they fix it, and I think they will. So what we see here is there was this wedge pattern here, and we can connect the highs going all the way back to the Ethereum all-time high. Here's this pivot point here and this pivot point here. And then you could connect the lows, which mimic kind of the Bitcoin channel that it was creating. And it creates this bigger wedge pattern. And what we could see here is that Ethereum broke to the downside. It retraced, tested that line, and has been fading since. So I would kind of be in that same camp of saying, okay, unless we somehow recapture this area and get back above it, you have to favor the downside on Ethereum. So we're looking at potentially retesting that 900-ish area, which was the low on Ethereum. If Bitcoin really goes to 9,000 or even 10,000, you got to imagine Ethereum's down at 600, if not even a little bit lower. But same kind of feeling with Bitcoin is that, once you get down sub 1,000, I think you're playing with the house's money as you accumulate. Obviously dollar cost average in, but if you ask me which are the safe cryptos to invest in for the longer term, there's only two of them, Ethereum and Bitcoin. Now, other people will tell you, oh, it's Ripple or this or that. But to be honest, I don't know if I'm pretty confident on Bitcoin and Ethereum. I'm not confident on anything else because we don't know the regulation yet. We don't know the rules that they're going to have to abide by, the technology, all that kind of stuff. So I would say, again, once you get to certain levels, it really makes sense to start accumulating Ethereum. I just think they're both going lower in the near term. Yeah, I mean, so I got back. I was in Boston a couple weeks ago, and I took an Uber home, and my Uber driver was a real estate agent, and that tells you everything you need to know about the real estate market right now.
Right.
So, the bottom line is interest rates have gone up so quickly and so dramatically that the housing market has dried up. I think you will see minimum 20% downside in housing, probably more than that too, because as the economy weakens and people start losing their jobs, then it's going to make it even harder for them to buy, let alone with prices where they are, with interest rates where they are. So I do honestly think at minimum we're going down 20%. And it's going to be a tricky thing. I mean, unless we get inflation under control, interest rates aren't going to come down for a while. So the housing market's going to be in some trouble for a little while. Yeah, so I think, real short term, you're coming into the holidays, you could kind of see a little bit less volatility, but there's no doubt that the S&P is still in a downtrend. You have a high, lower high, lower high, lows, lower lows across the board. So we are in a downtrend. I think we have to recognize that the economy is clearly slowing, contrary to what the Fed has kind of been telling us. It's absolutely slowing down, and that means that earnings are going to be lower. And you really don't see the S&P PE price to earnings ratio being at a level where it probably needs to go to factor in that slowing economy. And I honestly think it's going to be a very dramatic slowing. It's not just going to be a minor recession. I think it's going to be a pretty hefty recession because the Fed has really printed us out of every past recession. They've gotten things going. They can't do that now because of inflation being as high as it is. Even if it comes in, unless it goes back to 2%, how do they print us out of a recession? So I'm looking at a more protracted, like a longer term recession that really is going to hurt stocks like Apple and Microsoft and these other big names. And that's what makes up the indices. So I think by the end of this year or early 2023, the S&P tags this pre-COVID high, which was from February 2020. It's around just under 3,400. But I'm actually looking at potentially you could be seeing by next year, you could be down to this trend line at around 3,000 on the S&P or just sub 3,000. There's a great trend line right here. So I think there's more downside to go. I'm actually at this point, you give me Bitcoin at 10,000, I will take it every single time versus where the S&P is right now on the long side. So not so much on the long-term side, definitely more of a trading environment right now. We get these amazing pops and then drops and then pops and then drops. What I am doing, I'm continuing to kind of slowly accumulate gold. I think that at some point we're going to continue to see this dollar pullback, and that's going to be very, very good for gold. I also think that eventually crypto is the place you want to kind of hide. And again, when I say crypto, I mainly mean Ethereum and Bitcoin, but I think that those will eventually shift from being risk assets to more of a safety hedge as the economy gets worse and worse and worse, right? So as the economy gets worse, these companies in the S&P are going to make less and less money as the consumer pulls back. But crypto really doesn't have that factor, right? I mean, Bitcoin is just a store of value in an inflationary environment. And I think that's going to be the key is once you hit this low on Bitcoin, let's say 9,000, I think it turns into an asset that actually starts going up as the economic activity starts to go down.
Do you agree that price doesn't matter in the short term? Leave a comment if you found the content interesting. Click in like button. It really helps the channel find viewers similar to you. If you're new to the channel or haven't subscribed to it, click in subscribe button. We post content daily to keep you up to date on the current market and news. Thanks for watching. See you in the next video.